with fire, now it's closing in. Nothing to bear and nothing to win. Nothing to win. Could you believe? Could you believe? Could you believe? Could you believe? Fire, take my hand, I'll take you higher than you've ever been, than you've ever been.
Thank you for coming on into the live and sharing your essence with me in this eternal moment of which we all share an inextricable and inexorable part. Thank you for doing your part, for coming on in each and every day, and we'll do the same without wasting a single second of your time. Bada bing, bada boom, we go into the charts. It was not too long ago we were here on the Asian session start talking about the 70665 of the trend-based bearish fib extension level and getting that bounce off of that, and whether that trapdoor will be released to the downside or not. And we saw that hourly cross-up event, which we'll get into later as to why we called for a little bit of an upside bounce to the top of the range. Let's go see what the liquidity looks like in the heat map of high block. What is high block? Well, it's when people lock their liquidity in the charts to be burnt to a crisp by the market maker for not using a stop loss. And we get to see where those people get burnt to a crisp, as we do each and every day. Come with us as we take our journey, and hit the like button if you haven't already, because this costs a pretty penny every month and we can share to you free each and every day. So as we look in here, we saw that the 50x 194 million pool down here got burnt to a crisp, and there wasn't really so much induced here. We did talk about how there was more longs here, the $96 million in longs, shorts rather, as opposed to the longs here being 53 million. There's a 40 million imbalance, which they came back to reconcile without hesitation.
Fatality.
Yes, and they always come back without hesitation for those 100x. So if you are 100xing, you should consider paying yourself almost immediately, because they don't like to leave you on the table. So if we look at it currently, we have to zoom in. There's small pools here and there, 40 million here, 30 million there, 40 million here, 50 million there. A bunch, looks like it's more pinged to the downside as we are breaking 28K here on the 1 minute time frame here for high block. We are 9 billion imbalance to the downside here. We must not forget these $370 million down at 27,249 and 226 at 27,433 that they could come back to with ease if they so please at 2687, also a $226 million pool down here. But let's expand our vision to the upside and see where these higher time frame pools may lie. Shout out to everyone here. Bada bing, bada boom. We got 5 concurrent viewers. Thank you for tuning in. So as we said earlier in the Asian session, the 7-day imbalance is to the downside, but it's only a measly $3 or $4 billion, which is not much when you juxtapose to the higher time frame. So let's expand our vision to the higher time frame, shall we? The 1 month higher time frame pool, which was 40 billion here, if you recall, we gobbled that up at 27.8 and the 27K, high 27K region. That was the pools that got lost to Father Time that were up here ever since our drop down here. So they came back for those, and we are still seeing some juicy pools up at 32.1 at 15 billion. However, you got the same double digits down below. I would say you're slightly imbalanced to the upside here, but you do have this build nearly even Steven on the monthly time frame. If you start to shift your vision and expand it to the 3 month time frame, this is where we saw these $160 billion down here at the consolidated long region of the bearish trend base fib level at the 1382. Will we see a surge up for another attack at resistance before we make a surge back down? Is this just a breakout fake out to stab this pool to the downside? Who knows, but we should do our own due diligence before looking and making that decision. So we're going to go up to the 6 month and see that it is still imbalanced in terms of there being pools down below at 25.5, 90 billion, 24.9, 57 billion, 24.6, 67 billion, and 85 billion at 24.3. This entire region caked up quite nicely on the way down to 108 billion at 22.5. The path to the upside also starting to get caked up quite nicely in double digits, not getting to that high 100 billion just yet, but you're starting to see it get a narrative to the upside starting to appear up to 34K on the 6 month time frame. Are these positions which are in heat here at 108 billion market maker positions which are going to remain untouched as we make our ascent? That is the question on everyone's mind. Is this a real pump or fake out breakout? As we expand our vision to the yearly time frame and everything shifts to aquamarine here at 100 billion, you start to see the pools at 100 billion at 25.2, 100 billion at 24.8, 121 billion at 24.4, and then up above you start to see these 100 billion pools starting to develop at 32.4, 32.8, 32.3, 33.2, 33.6, and 34 even with 82 billion. So you're starting to see these higher numbers as we start to shift to the 1 year time frame. So this pool does, what we did earlier in the Asian session to make it simple was we just zoomed in here and counted the pools above and below in equidistant fashion and saw which one was nearer and far. So we said there's 32 billion up here at 28.8, 32 billion at 29.2, and 39 billion at 29.6. And just below 12, 5, 2, 7, 15. So it just looks like there's still more on this yearly time frame to grab up here to 29.6 if you just keep it simple on the yearly time frame and just zoom in and see what's just above price action. So there is still some more, a cool $90 billion up to 29.5 they could grab in this small pool. And if we expand that to even further, you see 78 billion at 30,400, 54 billion at 30,800. So while you do have 100 billion down here at 25.2, if we've expressed our intention here, there is still 90 billion just in the general vicinity. Rather than come back down to this pool, they could knock out these pools and do a double whammy, rise up to break down. How far do they go is the question. It starts to taper at 30K. Do we make it all the way up to 29.6 in this yearly time frame? We do have $90 billion up in that path on the yearly time frame, as opposed to less than 20 on the same number of price action. So as it stands right here, zooming into this price action right here, we could go all the way to 29.6, just phasing everything out entirely. If we maintain the 706, this is the trapdoor as we talked about before. So if it does not act as a trapdoor, it acts as support to bounce off of, and we could come up to the 236 of this bearish trend base fib level and negate it, and then we will no longer be bearish. So the 236 is your bearish signal, which is what we were talking about when we saw this short idea in play. And so that is where you start to see it negate as we reach the 618 there. So let's go to the Binance chart and go as to what we saw earlier today. We'll first zoom into the hourly to show you how that played out. Looks like we're getting a little bit of a rejection off of that last hour here. Let's go back into here. Let's turn on our oscillators and say what's up. Boom, boom. What is this? This is Momentum Master. Link in the description for more. MomentumMaster.info. Scroll down to features. Toggle at your leisure. See all the components in their glory using the toggle switch. And you can see everything. Or you can just hit single components and read about them as we go over. So it looks like what we were seeing before we went offline was we saw this cross-up event possibly occurring. We saw the baselines coming up to this, and we said we'd probably get a bounce if we could cross the baselines and complete that, and we did. We got it all the way up to here, and we talked about a larger narrative of if we could continue, we could come up to the top of this Keltner channel and the range, which happens to be here, coming up to the 28,158 region. We haven't yet come up to that region just yet. If we look at the blue candle here, this is a stopping volume candle. Is that showing that this move is over by this being a stopping volume candle? It did not make it above the previous wick. So is this taking out late longs at this time? Let's zoom into the 1 minute of the high block to see who they're going after right now. 55 million, 17 million, and 16 million. It looks like they're coming back into these small pools. I'm surprised there's no interest being expressed. The bubbles are quite sparse compared to some of these bigger bubbles here. So you're not really seeing these huge interest players joining up just yet. You are seeing more 55 million compared to the 40 million. Slight imbalance to the longs here as they open up into these green candles. Sorry, my contact is dry right now. So are we starting to do what we normally say happens, which is you bounce, you break through the cloud, you come back and you kiss it for support? We were talking about once you would get that, you would possibly fatigue out for a little bit. So what we're seeing here on the hourly time frame is you're getting overbought with that double top status, and the money flow is above the RSI here, which is suggesting it needs to come back to the RSI to say what's up. We saw this previous money flow hidden bullish divergence and on the RSI as well, which is why we saw this cross up event possibly play out, which it did. for 1.25%. All right, so let's see if this is going to continue. We're going to go to the 4-hour time frame here. Once again, New York was off for the bank holiday yesterday, so they're going to want to play ball today. We are seeing the cross down here, which we were taking note of, but the bullish thing we saw was the reset of the stochastic without giving back much on price action. What do I mean by that? Well, we essentially consolidated while the stochastic reset, which is a bullish signal from past experience. Also, the angle in which this Williams was dumping was starting to curve out in a way that was not an open beak, so it was not showing the momentum being filled to the downside. The thing you do have to watch out for is this cross down event. Will it play out? If we cannot maintain this baseline, then you can expect more drop slippage on this price action here. Now, the one cool thing to note is this 4-hour candle being as green as it was, has no volume inside of it, just not a significant volume to signify the PVSRA strategy, but we are holding the adaptive moving average here. So this adaptive moving average has been previously support resistance. We haven't yet to, this is our first attempt in a while since May 10th to try to pierce it again. So are we trying to reclaim this idea? So the thing that we are also seeing in the curvature here as we make our ascent through the time frames from the hourly, we're going to see how the 6-hour cloud has shifted, the angle in which this volume is quite healthy here. If we go to the 12-hour time frame, this is where we started to see the cloud curvature here in a nice manner, which basically implied this upside move before it happened. Did we know it was going to appear in such a fashion? No, we did not, but you set yourself up for that by getting it on the lows and then be pleasantly surprised if it goes up in that fashion, and seeing this angle preemptive before this move to the upside. And that was also on the 22-hour time frame as well. So you're starting to see the shift in that idea on the 22. So what is this curvature? Well, we weren't really set in stone about that because the angle started to change here on the daily, but this is what you would need to see us close a candle above this cloud for it to be bullish. We are currently getting rejection off the adaptive moving average on the daily time frame, so that adaptive kiss and rejection, we would need to consolidate in this region and hold above this cloud for it to be anything more than just a stab at it before they deflate back down into these nether regions of the range of the 786 to 1 region, which we've been in since May 11th. I'd like to see us leave this range in some way, shape, or form with some intention, so things start to get interesting again. It's been pretty boring through the month of May. I've been more interested in NASDAQ. We'll show you that in a minute. But this is why we had these little curvature lines on our chart. So as it stands right now, the hourly is doing a very intense move to the downside here. What is it they're aiming at is the question. Let's go see who's being enticed into the charts, shall we? So they're going back for the 100x by the looks of it. The pre-market New York Open is taking it to the downside, basically negating everything from London. So London's move to the upside from 5 is being completely negated here by the looks of it. We are attempting to break the cloud on the hourly as we make this bearish engulfing candle of the previous upside path. So this is what I mean by when you look for shorts. Like if you're trying to short here for a swing play, it would have put you in a little bit of sweats because you're not getting that second McDonald's double top idea. So when you get that double top or the triple top, the 3 hits to the high, that's generally when you start to think about shorting. I wouldn't have thought to short, even though unless you're a scalper, then you can know when to get in and get out based off that idea of the cross up here. So you could take basically cross up to cross up until it's no longer crossing. So So as long as you can hold this fat boy baseline and this cloud, this could just be a little bit of a liquidity grab on the 100xers here. Let's go see if they got knocked out just yet. They did, and they spawned off their divergence of these $100 million here. So these 100x long characters at 27,775 and 27,797 just got taken out here by this green candle.
Fatality.
Yes, and they come back for those 100xers. So you can see where they opened basically in these two candles here. So this dot here was that $55 million character, and this $55 million character was there, and they just said, no thanks, you're a bit too rich for my blood, and they came back for them. So are they enticing any shorts or anything off of that play just now? A lot of times when there's price action moving, they do entice more in. I'm surprised the bubbles are so small. It's interesting. There's lack of liquidity here on a Tuesday. I suppose when New York opens, more will become interested. So as it stands right now, there is slightly more here. There's a short that opened right there at $23 million as they drop down. So are they going to come back for this guy here on this smaller time frame? As it stands right now, you do have a pool starting to develop up here at 28,687, 174 million stacked with a bunch of other bubbles over here, and you also have their partners in crime up here at 28,778. However, you're getting these nice stacked bubbles that lest we forget down here at 27,433, 27,249, and 26,693 and 26,873. These are things you can note and put in your chart. This is what we put in as these dotted lines, and they come back and tag them. So as it stands right now, we are basically just creating this retest of the breakout. Is this breakout going to hold, or are we going to drop lower into breaking this super trend on the hourly time frame? So the hourly time frame is getting overbought here, which is why you're seeing this kind of chill out here. Ideally, you would have wanted it to see it go sideways and not give back so much of the price action that it did on its rise up here. So enough jibber jabber. Let's see where it's going to go here. If we go into the 15 minute, the 15 minute is getting the cross down event. I was getting these alerts to my phone about the 5 time frames being overbought here. So coming back to the 15-minute cloud, which is thick, is something you'd like to see some sort of cloud kiss hold here as the angle of this is getting stronger. It was previously thin and getting thick, and now it's getting thicker and rising. So is this bullish volume going to hold here on the 15-minute time frame? This yellow line happens to be that cloud on the higher time frame as well. You had support, breakdown, resistance. We're coming back to try to test this cloud idea on the daily. Are we going to break through that or not? All right, so basically I would say that before New York, you're going to see this kind of stop hunt in one direction, which seems to be to the longs. Is that to basically set it up for a New York pump, and they're trying to get out the 100xers so they can pump it at 11 my time, basically an hour and 20 minutes from now. That's generally when you get the London close. As you see here, London close, and some move happens. Yesterday's case was to the downside. Are you going to see this stop hunt and then a continuation to the upside on the London close time? Generally, when the baton of London close passing off to New York is where you'll start to see a move. So are we going to start to see a move to the upside in about an hour and 20 minutes time? Basically, this would be a lower time frame play, but the fact that the 4-hour has reset is something that is keep giving me pause about considering a short at this time. Basically, the 4-hour adaptive holding and the fact that it reset here is a bullish sign, despite whatever else may be told about this cross down of the baseline. So this is something you would be thinking about if you are considering a long. Are we going to consider these weighted moving averages and adaptive reclamations, which were previous resistance? If we hold these, which we have shown a bounce here, are we going to maintain this? The bullish volume is stepping up to the plate here, and you are starting to see this kind of curvature and the money flow beneath the RSI on the 6-hour time frame. So the 4 and the 6 could push your 1 hour and 15-minute play to an interesting level. We still have a pool from long before up here at 28,540 or 527 that we were leaving in the charts. That was a good $300 million character, if I'm not mistaken. This is when we had a huge amount of bubbles that got lost to farther time that are still open probably. And yeah, this yellow line is the daily resistance on higher time frames. If we go back to the higher time frame, we can see where those touches are. I only put support and resistance where daily touches occur in a lot of points. So here you have a lot of points on the daily time frame. So this is a lot of support and resistance to mind at 28,690. So if we can get above that level, 28,690, then the resistance story that we've been dealing with here with the shoulder, head, and shoulders that took us to the downside could be over. We went over last week about how the month of May has treated us much better since May. If we go to May 1st, which was here, if we go from May 1st to where we ended up, it's a 12% correction, whereas last year's May was a 35%, if I'm not mistaken. Where was that? Here we go. So we basically, if we go from wick to wick though, so it was about basically like a 33% or more. If we can move this all the way up to the wick, it was a 33.333% correction from the month of May last time. So this has been a very minor correction so far, kind of boring in the last half of the month. It was just sitting there at that range. The fact that we didn't go any lower is kind of interesting to note. We had all that time to, and we didn't. Is that an extra accumulation zone where people are loading up to send it to the upside? And this region happens to be market maker positions, which they're going to leave untouched. It's so obvious that they are broadcasting that region as being thick with liquidity. It almost seems like it's a position that they're leaving there for a reason, for whatever reason. It seems so obvious that they would want to take it, but they're not. Why is it that they leave it there and not take it? It's a good question. All right. So basically, you're going to wait. If you're looking to trade BTC, you'd be looking to establish a position within the London close time here. And just before that, you would start to see signs. In this case, yesterday you had the cross down event, which you could have taken to the upside, or sorry, to the downside. So if you see some sort of reclamation of some sort of cloud / area of interest here, looks like right now we're taking it to the downside in a furious fashion. Where is it they're looking to go? If we take this entire retrace idea, you could get a 618 bounce at 27,740 if it is going to continue. Looks like you're holding this super trend on the 15, which is backtestably true, and how it holds if the trend is true or not. So there are people who put order blocks in at those regions. It's all about your level of tolerance for downside with for drawdown. How much of a sniper entry do you want? And if you're looking for that on that time frame, everything is fractal in nature. So if you're more conservative, you can look for fair value gap recoveries down here at 26,853 if you believe it's coming down to that region. So everything's a if then. If it breaks down out of here and stops holding this hourly bullish super trend, which it's still bullish on and bought off of that backtestable level, If it breaks that, then you could expect to come down to here. So it's all, if it breaks that, then look to here. If it breaks that, look to here. And these are your levels. Play them back at your leisure. Once again, the 4-hour time frame, we'll leave you with that. The 4-hour time frame does have the cross down event. If you cannot reclaim the baselines, then you can expect more downside. But this interesting reset of the stochastic has a hidden message within, with the cloud pointing to the upside here, and the reclamation of the adaptive moving average has me thinking about things to come for upside potential. This is also leading me to how we can start to project that path. If that is true, we can take this impulse to the upside, to the tippy top from wick to wick, and go down to the retrace. If this is truly the retrace and it's only to this level here, then you'd expect that the 28,135 region to be your 236. If it gets above 28,135 and holds, then you can expect to come into these regions. Then perhaps we are aiming at those pools up above. Dare I say it. So you have to get above this 28,135 region first and foremost. And that's my story, and I'm sticking to it, ladies and gents, and I will see you in the NASDAQ. If you're in the Momentum Master Discord, we can go over some setups and things and try to catch that open for the NASDAQ futures. Thank you for coming on into live and sharing your essence with me in this eternal moment of which we all share an inextricable and inexorable part. Thank you for doing your part, for coming on in each and every day, and we'll do the same. And we'll keep the fire, the precision, the accuracy